Hey everyone, I'm Cassius Holmes, founder of the Personal Banking Blueprint. And you may recognize my name from leading some of the country's largest senior focused organizations like Devoted Health, Dedicated Medical, and Humana Healthcare. And with a proven track record of driving growth and success in these esteemed institutions, I've dedicated my career to empowering individuals and families to achieve their financial goals. And today, I actually want to come and talk to you guys a little bit about traditional banking and how it compares to the personal banking blueprint. And so, for years, you and myself have been conditioned to follow the traditional banking model, where we work hard, we're paying high interest rates, and we're struggling to save for the future. And so the traditional system often leaves us feeling trapped and in a cycle of debt and financial stress. But what if I told you that there was actually a better way, and our personal banking blueprint offers a transformative approach to managing your finances? Unlike the traditional banking systems, our blueprint empowers you to become your own bank, where you are recapturing lost interest and you're turning it into wealth. And so in this video, we'll explore the key differences, the traditional banking system and the personal banking blueprint, and how you can take better control of your finances. So let's get started. As you can see here, and we'll make this a little larger for you, this is basically the cycle and the system right before your eyes that you actually go through on a monthly basis, day in and day out. And you may not even know, but I think as we go through this, it's going to create that visual picture to help you really get a better understanding of why you're not where you want to be financially. And like I said in the past video, it's not your fault. You're actually in a system where this thing is actually planned out against you. Okay. And so we're working hard. And then once we get paid, the first thing that we actually do, the first thing that happens is good old Uncle Sam comes and takes his cut. And he don't take a little cut. He actually takes a pretty hefty cut. A cut upwards of 22%. And so we talked in the past about how we're paying 40% taxes and 34% interest. 74% of your lifetime income goes towards taxes and interest. This is going to give you that visual view and actually seeing it. As you can see here, there's 22% federal income tax, state tax, Social Security, Medicare tax gone right off the jump. Okay, right off the jump. From that, you're depositing into the bank, good old bank, that offer you a free checking account as long as you set up your direct deposit. Thank you for being so nice to me. In return for me doing that and depositing my check month in and month out into your bank, you're going to pay me less than 1% interest, basically like 0% interest. That doesn't sound like a good deal, because we got a problem. Inflation is increasing at 3.5% a year. So if I'm depositing my money into your bank and you're not paying me any interest, but inflation is increasing 3.5% on a yearly basis, not only am I taxed, but I'm also losing as my money sit in your bank account. They got a saying that $100 just ain't what it used to be. And that's speaking to inflation, which is what they call a silent killer to wealth, inflation. And so, unfortunately, it doesn't stop there. Our next step is the money finally hits our bank account and we start to pay our bills. Immediately, we start to pay our bills. And what happens when we start paying our credit cards, our mortgage, our car payments? What are we predominantly paying? We're paying interest. You see, everyone, interest is front loaded. That means in your first several years is basically the majority all in interest repayment period. You see, the banks and the lenders, they want their money up front, right? They want their money up front, and they want a lot. As you can see here, credit card interest, 18 to 25%. Mortgage interest, 2 to 8%. Car loan interest, 5 to 12%. Student loan interest, 5.5 to 8%. And the student loan is one that I really want you guys to pay attention to, because this is something that is a major issue, and the banking and lending systems are really about to move forward aggressively with trying to recoup those funds. They got to get it back. They lended it out. You accepted it. These institutions want to get paid. Okay, and so there's some major changes that's going to be coming around this. that you guys need to pay attention to. And so, boom, you go out, you pay your bills. Now you take what's left over and you kind of enjoy yourself. You finally get to access some of the money that you worked for after Uncle Sam got his cut, the bank got their cut, and now your lenders get their cut. Now it's time for you to have a little bit of fun. So you go to a restaurant, you participate in AAU for your kids. You have your recreational spending habits that you actually have. And once you do that, then at that point, you think about savings and you want to save what's left. And that, ladies and gentlemen, is why the average saving rate is 0 to 3%. Because we're doing it last, right? We're saving last. We're saving what's left. And that's not the way to go about it. But this system that we're in, this traditional banking system, causes for us to use credit cards and loans for emergencies, vacations, other investments if we can stand it, or just to use it just to get back to the next payday, to unfortunately start the same process and the same cycle over again. We like to call it the matrix of debt because it was actually created for you guys to follow this system. That's why they call it the traditional banking system. But have no fear, Concepts is actually here. And at Concepts, we leverage insurance concepts for specific reasons to help consumers, families, and business owners ensure their dreams and actually secure your future. And so our number one concept that we offer to our clientele is the personal banking blueprint. You see, unlike the traditional banking, you work, you get paid, and yes, you got to pay those upwards of 22% taxes. There's nothing we can do about that, right? And then once you pay your taxes, that money is deposited into your bank account. And yes, you're going to get less than 1% interest, and the economy is still going to be inflating 3.5% interest a year, right? But here's where things change. Here's where the magic starts to happen. You see, because in the personal banking blueprint, we don't coach you to pay your bills as your next steps. We intercept that and we start to fund your own bank, the personal banking blueprint. Pay yourself first, fund your own bank. And there's a couple of things that happen when you do that. Number one, you start to participate in tax advantages. So before you got hit with the taxes on the front end, now you start to participate in tax advantages. And so what that means is that any dollars, any money, any accumulation that you have within your own bank, it grows tax deferred and it can come out tax free through loans. So again, that is putting you guys in a phenomenal position. Number two, you got a debt benefit. You got a debt benefit. We take on a lot of risks as we get out and we get in rush hour traffic and we drive to work. Sometimes people don't come home. But what will come home is a paycheck so that your family can be secure with the personal banking blueprint. It also has living benefits included in it. What if we're driving to work and we get in an accident? Or we have a heart attack, cancer, or stroke, and we hadn't reached retirement yet? You see, our health allows us to work, not necessarily our age. It's while we're healthy. And so this is the reason that we have to, number one, protect ourselves, but number two, take control of our finances because we don't have a set amount of time to be able to accomplish this. Number four, we can earn 4 to 6% interest guaranteed. What did I say inflation was? 3.5%. But when you fund your own bank, you're earning 4 to 6% guaranteed. And here's another thing, it's uninterrupted compound growth. Uninterrupted. Nothing can interrupt your compound growth, even if you borrowed against it. But let that sink in. Even if you borrowed against it to pay off debt or funded investment, you will always and forever continue to earn 4 to 6% interest inside of your account. And we do this through what's called non-direct recognition. Non-direct recognition dividends. You see, within your personal banking blueprint, you actually are an owner of the company. We do this with certain insurance companies. Not every company works like this. There's only a few that do. And so you're actually participating in the profitability of your company and you get rewarded in the forms of dividends. The next thing you do once your personal banking blueprint is funded, your next step is to organize your debt. And so there's a lot of people that try to become your own bank, and this is where they typically fall short. It's a little bit of a tedious process to be able to organize your debts. You got to go pull each account, see how much you owe, see what interest rate you're actually paying. And that's where things kind of go left because we understand that you're busy. But with us, we have a unique mechanism that we actually have artificial intelligence that actually does all the hard and heavy lifting for you. It comes in, it organizes your debt. It reviews how much you owe, what interest rates you're currently paying, and organize it so that you pay the most efficient one first and in order, so that you can actually get it out of debt as fast as possible. And so what we want you to do is we want you to pay minimum payments while you overly fund your banking blueprint. And at certain times, we will know exactly the point where we will work with you to let you know it's time to start to pay off a debt and the next debt and the next debt and the next debt. And every time we do that, every time we pay off your debts, we're actually paying off these credit cards, mortgages, car loans, and student loans in record time, allowing you to recapture interest that otherwise the traditional banking and lending systems already had calculated that they were going to receive from you. You interrupted their system by implementing your own system, and you recaptured the interest that you're going to pay out. Naturally, enjoying more cash flow and increasing your savings. You see, individuals with the personal banking blueprint are able to increase their savings from 3% to 17 to 25%. That is a game changer. But not only are you increasing your savings, but you're recapturing interest in 10 years upwards of $100,000 plus back into your family's last name, back into your family bank. Guys, as you can quickly see, your financial scenario is completely turned around and working in your favor versus the traditional banking and lending favors right away. And we repeat this process until we become debt-free. And once we do, we actually coach you and teach you how to be able to invest in cash flowing assets funded by your own bank, allowing you to be able to use your money twice and actually become what's called velocity banking. And what that means is that you're now using velocity because you're funding your own investments and you're earning interest in both places simultaneously at the same time, ultimately creating financial freedom. You see, guys, being an American is not about paying taxes. There's nothing patriotic about that. What is patriotic and what is great and what makes America great is the fact that we can be educated. We can get educated. We can find a different way. We're not forced to do it a certain way. So you're forced to be able to find a smarter solution that works for you and your family and your business. And that is the American dream, so that you can become financially free. It starts here, guys. And so I want to encourage you to leave your comments. Let me know what you think. Can you see how this can actually work for you versus against you? I want to encourage you to be able to click the link to be able to apply to work with us. You see, this is financial coaching. It's not just something we set you up with and we let you go on your own. We're actually in this with you, but until you become debt-free, we're working side by side with you and beyond. And so with that being said, we can only take on so many people per month. We don't want to overload and lower the quality of the individuals that we're actually helping. Okay? So we want to ask that you apply. Please don't wait. Get in before it's too late and subscribe to be able to learn additional information about what we're doing to be able to help families and business owners become debt-free and financially independent in 10 years or less. So again, I want to thank you guys for joining. Click the link, and I look forward to seeing you on the next call or video.